This is like such a powerful and compelling message that we generally don't get here in Boston. So I really appreciate the message that Tone is bringing us today. So I think it's definitely reframed my way of thinking about stuff. So thank you so much.
All right, thank you guys. All right, and we are live. Let me just make sure the audio, I'm gonna get closer to the mic. I won't be able to see it actually. All right, guys, we are live on the audio stream as well. I had just completed, for the people tuning in live, I have just completed the presentation. I figured out what I'm gonna do with my live streams. Let me just make sure that when I sit down, you'll be able to see me. Yep. I decided what I'm gonna do with my live streams at meetups. I'm gonna do the presentation off live air, but then I'll do the Q&A with live air. All right, guys, floor is yours. I will try to repeat the question because I'm the one next to the microphone, and go from there.
Go to the next person who has a question.
No, it's all right. I'll just pick on something. I think we'll be able to figure it out. Oh, you know what? I'm literally sitting right in the light. Let me slide this over a bit. All right, let's go. Show of hands. Got to be some questions.
So you're saying it's a bunch of like 13-year-olds. Do you actually think most of the volume is actually 13-year-olds, or is it like maybe people with actually money and family funds who are just picking like the latest, hottest thing? Like,
no, most of the money isn't. Most of the money, it's still the younger crowd. All of the, mostly the ICO investors. Like right now, it's becoming all about the pre-ICO. Right now, it's like that video I played of Jordan Belfort. Right now, it's you have to be on the ground floor. You have to be involved in a VC. You have to be, they're the ones that get in real early, and then they sell real early to the majority of the people. Again, I don't know how long this ICO model is going to last, but it's not going to last too long. Either that or it's just going to get regulated exactly like the IPOs did, because it doesn't make any sense. There's nothing different there. There is nothing different between the ICO and the IPO other than all the middlemen are gone, but all those middlemen were there for a reason. They were there because the system got out of control back in the 20s and 30s, and then once again with the dot-coms. The concept of a utility token where they tell you that you must have my token to use my product, it really makes no sense. But just think about it, right? Like Bitcoin is a utility token. You must have Bitcoin to use the Bitcoin blockchain. There's really no other way. There's no way to separate them. It's a must. Bitcoin's clones like Litecoin, Monero, same thing. Like the purpose of the token is to move the token itself. But when it comes to some kind of a product, a company that is launching a product, like you can't conceptually say that you must use our internal token and only our internal token to use our product, and that token fluctuates in value for price discovery. Like imagine you go to a casino and you convert your dollars for the chips of that casino, and as you walk around that casino betting, the value of that chip is fluctuating because people are trading it on the internet, right? Airline miles is the same way. They're pegged to something. Each airline mile is worth X amount of dollars to the airline. And they're just like reward points. They don't fluctuate in value. Making your users speculators of your product is equivalent to buying Amazon products with Amazon stock. So anytime one of these ICOs is telling you that, well, you need our token and that token is going to fluctuate in value because we don't know how much it should cost, is almost like, yeah, let's relaunch Amazon and only accept pets.com stock or pets.com token that trades like a stock for it. And if a company has a stock and a utility token that fluctuates in value, you can see the situation here, right? I mean, people are using one for speculation when they should be using the other. They want the best of both worlds. They want the ability to have unqualified investors in your company, which is what an IPO is. And they also want to get away with not following any of the regulation. And it's going to end in the worst of both worlds. Their company is not economically viable, and the regulators are going to get them.
So, Tone, you've been very negative on ICOs, and I agree with almost everything you say about ICOs. You say that the purpose of the ICO is to get the founders rich, and no one's actually using the actual ICO token for the product. They're just using it for speculation. Like, for example, I don't know, Civic or whatever you want to call it. You know, actually, how does the Civic token come into play for using it for identity? So I get that aspect of it. Seems like your number one complaint about ICOs is that they are soliciting investment from non-qualified investors.
Right, for very speculative, questionable ideas.
For speculation only, not actually for using the actual
network. It's speculative even from the founders, right? I mean, the founders are coming up with a speculative idea and they want it financed in a way that leaves them with full control.
Right, exactly. What would you say about an ICO that specifically did it by the book and tried to only solicit from qualified investors under the law? Would you say, I mean, you would probably still not like the ICO, but would you say that that's a little less scammy if it's a little bit more legit? Like
I can make the argument that it's more, because then
more legit or more scammy?
More scammy. I can make the argument that it's more. You can make the argument in both ways. The way I can make the argument that it's more is that now you're only going to sell it to the 8 or 10 rich people who within months are able to turn around and sell that to the unqualified people, making themselves even richer, right? So if those that are pushing the ICOs are doing it under the umbrella that the rich are only getting richer from inside stuff, well, then if you're only able to get that initial ICO from those rich investors, it's not like the IPO model where they're the traditional investing, where they're stuck in that investment for years. They guide the company, but here they can exit the moment, you know, Poloniex lists the ICO or Bittrex or any other exchange, right? So a recent paper said that 50-60% of all of these ICO projects that were going to code in mandatory hold of those tokens didn't even code it. Okay, sorry, I forgot to repeat the question. I think you guys heard it. I saw the mic levels. Yeah, no, the question was if an ICO does things by the book. The only way, there are a few ICOs where the purpose of the ICO isn't to raise capital. And then you can make a little bit of an argument that the only purpose of the ICO is for the ease of transfer from one person to another. And like I said, the only one that I know of was a VC fund where they collected 90 million in traditional means, and the final 10 million, so 10% of the fund, was sold in $1 increments, and each of those $1 represented by a token. But each dollar invested went into the pool of funds that was going to be used as a VC would be investing in blockchain companies or any companies. And then the value of your token is fully pegged by a $1 investment in VC funds. And then there's a quantifiable metric on how much that dollar is earning or losing. And the only advantage is 10% of this fund is easily transferable by anybody in the world. So that should add a little bit of price premium just for that ease of transfer. I believe that token trades at 100-something% premium, which is ridiculous. So it's always going to be overvalued. And if it ever goes undervalued, then the VC knows what they've done. And if that $100 million fund invests in bad companies and it loses money, then that token is going to trade below $1. It has to. It has no value. The only purpose of that token is the underlying investment and how it's doing. So if your token is pegged to something, then it's okay. And now people are trying to recreate e-gold. Well, we're going to peg our token to a gram of gold. And now you can trade our token. Yeah, but now what's the purpose of that? The purpose of that token is now to be used as money. But it's centralized, and it's going to have the same problem as e-gold. E-gold was centralized. The government didn't like how those tokens were being used. They came and confiscated the gold and arrested the people in charge of protecting that gold, right? So it depends on how that token is being used. If that token is actually being used the way it was intended, and and the government doesn't have a problem with that, then it's okay. But that's not how they're being used today. That's a very niche case. Question back there.
So Tom, do you see any good things or any positive things? I heard a very, negative viewpoint on the ICOs. Do you see anything potentially positive or good coming out of them, or the whole approach of using the ICO as a fundraising model?
I have not yet. I mean, yeah. Oh, yeah. Repeat the question. Have I seen anything good coming out of the whole ICO world and space? I haven't yet. I mean, except for those few niche cases.
Can you talk about this a little bit?
Sure. The niche case where the ICO allows the ease of transferability of some kind of an asset.
Are there any examples that you can mention?
Well, that one, the VC fund, right?
Blockchain.
Yeah, it was the blockchain capital token. And there was a couple of others that did something very similar. There is another problem here. These tokens are being built on top of platforms that people think are decentralized and sustainable, like Ethereum, and they're not. And the world is starting to realize that. And for those that think that Ethereum is sustainable, please go home and try to create an Ethereum node alongside a Bitcoin node, and you will see you will have your Bitcoin node up and running within a week if you have a decent internet connection, within 2 weeks if you have a slowish internet connection, and you will never get that Ethereum node to run. You'll never be able to download the history of all the Ethereum transactions. You'll never be able to validate your own transactions on Ethereum. So technologically, they're not going to be sustainable, not to mention the regulatory problems. So I feel that a lot of these ICOs are being built on top of unsustainable technology that's going to end badly.
So is it the problem the ICO, or is the problem
both? It's both. There are problems on multiple levels with them. I guess the good news is everyone was paying $100 a share for a .com in the 90s. Eventually, people wised up and said a .com isn't worth anything. It's the company behind it. Your kids will be making fun of the people that were investing in ICOs, and they're not going to make that mistake again, right? Kind of like how many of you are getting adjustable rate mortgages today? Pretty much nobody, right? But that's what everybody was doing in the early 2000s. This is going to be a bubble. It's going to end like the other bubbles. The regulation is going to show up afterwards unnecessarily. Like all the regulation to prevent the next housing bubble came in after the housing bubble. Well, who cares? I was working at Bear Stearns at the time. Like, we all didn't want to lose our jobs. Like, the financial industry doesn't want to repeat the same mistake again. Bubbles don't repeat. Bubbles repeat when people have died that remember that bubble. Like the .com bubble wasn't going to repeat. Now that we're 20, 25 years later, we're repeating it with ICOs as if it's any different. The other issue is, what was the actual invention? The blockchain, the Satoshi Nakamoto's blockchain, and the proof of work, the genius behind proof of work and creating decentralized money. We only have one internet today, one public internet that is as decentralized as you're willing to put in the time and use it. The internet is fairly decentralized. It's not perfect. It's not perfectly private. It's not always fast. Not everyone has access to it, but it's pretty decentralized. No one controls it. No one controls the internet. And every jurisdiction, every country has different I guess, control of the internet. Like in China, they have a little more control of what the people see and what websites they can go to than here. In other countries, they have even less options of how to use the internet. I see the Bitcoin blockchain as the same way. There will be only one public blockchain because just there's not enough resources for multiple. Because you still have to mine it, you have to secure it, you still have to put in electricity, you have to mine the hardware, and it's going to converge into one. One good functional internet is better. Imagine if every country had their own internet and you had to like literally start a new internet if you want to go to a website of another country, right? It's not going to work. You'd have to, if you have an internet business, you'd have to create your website on multiple internets. It doesn't work. I expect there to be one blockchain. It may not be Bitcoin. I'm expecting it to be Bitcoin. I'm invested in it to be Bitcoin. I just can't see anything else winning the decentralized game. You can't make a replica of Bitcoin and make it more decentralized. That's not how it works. Everything that came after Bitcoin had a leader that had to promote it and had serious control over its coding, and they still do. So it's really hard for me to come up with good things to come out of the ICO space. Maybe a couple of ideas are viable that are being financed by ICOs. But these ideas are going to be recreated in a non-ICO environment. Even the concept of a smart contract itself. The concept of a smart contract is going to become a lot more popular. The question becomes, does your smart contract need to be decentralized? Or does it just needs to do what it's supposed to do? It will be way more efficient. And it can be private in a centralized way. Because at the end of the day, your smart contract depends on something physical most of the time. A smart contract for a self-driving car to pick you up and drop you off. Why does that contract between you and a self-driving car, why does it need to be decentralized? Why does it need censorship resistance? Why does it have to be stored on 100,000 computers around the world being continuously processed for the rest of time? It doesn't. A smart contract is you walking up to a soda machine and buying a Coke. Why does that need to be decentralized? When you come down to it, there's the simplest smart contracts are something like a soda machine. Doesn't need to be decentralized. I know there has to be an ICO out there somewhere that says the contract between you and a soda machine needs to be decentralized and it needs to be recalculated for the rest of time. On the upper end of contracts that need the maximum amount of censorship resistance and decentralization is what recently was all over the news with Augur and their assassination markets. So that's the kind of contract that mandates decentralization and censorship resistance. On the other end, you have the soda machine. Where is the line? Where is the line of where decentralization and inefficiency of technology is worth it for censorship resistance and privacy? And that line, I think, is literally just under what Augur is doing. And I said it privately, not so much publicly, for years, that the only reason Ethereum will ever be useful is for assassination contracts, because those are the only ones that require censorship resistance and decentralization. All the other contracts will be so much more efficient in a centralized way, and a company will give you privacy and encryption. The only thing that we needed was the decentralized form of money, which we now have with Bitcoin. And many people may not even use it in the future because they don't need that aspect. Bitcoin competes with traditional money on two fronts. One is the properties of censorship resistance, decentralization, and it being unconfiscatable if you're properly protecting it. That's one way Bitcoin competes with traditional US dollars or euros. Not everyone cares about these properties. The other way Bitcoin competes with the fiat money system is, as Saifedean describes in the Bitcoin Standard book, which is a book I strongly recommend, Bitcoin is hard money. Bitcoin has a finite supply, and you know how many new Bitcoins are being created every year. So Bitcoin competes on monetary policy and the fact that it's censorship-resistant value transfer and unconfiscatable. To some people, both concepts are important. To other people, neither concept is important, okay? But that's what it actually competes on. I'm not sure if I can be convinced that the smart contract of your company needs to be decentralized, because decentralization is very inefficient. And you're seeing it now. Prior to Bitcoin, our best example of decentralization was BitTorrent, because the file sharing, the Napsters and the LimeWires and Kazaa and BearShare, I can name them all day. That was my domain. That was during, I was in college when Napster went down. Oh, it became horrible to download music. Viruses everywhere. But what happened there, right? So the MP3s hit the music industry by surprise, because a lot of people didn't want to pay for a full CD. Not only did you not want to pay for a full CD, not everyone knew how to convert CDs to MP3s. And if you have a CD, you can only play that CD in a big Discman. With MP3s, you can play them on your computer. So what did the file sharing, and once BitTorrent came out, it was decentralized. So what did BitTorrent compete on? It competed on ease of technology, because you're now able to play one song at a time and everywhere. Even when iTunes was out, and I can buy these songs from iTunes. Here's the problem that I had. I was actually a DJ at the time, and I had to use other people's computers, and I had my music on a thumb drive. Well, now I can only allow 5 other computers to play a song that I've bought from iTunes. That's not good. It's my song. I paid for it. I want to play it everywhere. The BitTorrent system competed on 2 fronts. It was just the ease of listening to any song you wanted at any time on any machine. And 2, the censorship resistance of not having to pay for it and just download it for free. What happened? I haven't downloaded a song in a while. Technology has caught up. Now, it's so easy for you to play the song that you like. You have other means to do that through Spotify and through Pandora. They even make lists for you. So the ease of technology, like you no longer, file sharing could no longer compete on ease of listening to the song. In fact, it's more complicated. You have to spend time finding the song, downloading, and risking a virus. And the other way it competed was on costs, and the costs have come down pretty heavily. So now the pirating of music is significantly lower. Pirating of movies is still pretty high. Let's see if they can resolve that problem. Okay, I'm pretty sure a lot of us run ways to just stream movies now, but no one really does that with music anymore. Most of us are willing to pay the $5 to Pandora or whatever it is it costs. And you can even use their free versions with a few commercials. So Bitcoin is doing the same thing. It's competing on those 2 fronts: sound monetary policy and censorship resistance. Are governments gonna back their currency by gold and go back to the old standard? Probably not. Are governments gonna eliminate the money laundering laws and allow people to use their money in any way they see fit? Probably not. Looks like it's going in the opposite direction. So Bitcoin is doing well with what it's competing with. On the flip side, smart contracts, what are they competing with? Just think about it, right? Like, do you trust Google with your data? Most of us do, right? The more interesting question is, do you trust Google with your life? Because guess who controls that GPS that you make a turn right off a cliff, right? So what's going to happen when you get into a smart car? A smart car with no driver. You're going to have to put your life in somebody else's hands, right? Those of you that are using Teslas right now, self-driving Tesla, you're putting your life in the hands of Elon Musk and Tesla, because they will be responsible for your life. Doesn't work as well if your self-driving car is based on a GPS system that is decentralized on Ethereum and nobody's responsible. Who's going to get into that car? It sounds fun to decentralize everything, but in a decentralized system like that, no one's in charge. What happens when things go bad? Who's incentivized to fix it? If there is an internal token, now you're forcing people to use the money of that system to use that token as a reward to fix the problem. Who manages that token? Well, now you're back to being centralized again. Whoever manages that token is responsible for fixing the bugs. Therefore, those people are responsible for your life if they've designed a decentralized self-driving Uber. These are very complicated solutions, and no one asking the questions deep enough. They just want to invest in the ICO of that idea.
So what are your thoughts on the view that Bitcoin is probably one of the most centralized systems, seeing that most of the hash power is controlled by money, that being Bitcoin?
Well, it was proven that it doesn't matter because of the user-activated soft fork and the segregated witness. So 90% of miners did not want the update to the code being segregated witness, and they lost. So it tells me that they have no control other than doing the job that they're supposed to do, which is not to think, but just to solve math problems and collect the reward for processing our transactions. And it's the nodes and the people running those nodes. Again, something you can't do on Ethereum. It's the nodes and people that are running those nodes decide what Bitcoin is, not the miners. Bitmain does have a monopoly on manufacturing chips, not necessarily running the equipment. Bitmain is also going public on the Hong Kong Stock Exchange. When a company goes public, they have to open up their books. They have to be transparent about their business. That's what it means to go public on a stock market. And therefore, Bitmain, I've seen articles, they're trying to claim that they're only 5% of the hash power. Now, they're probably 7% of the mining hardware, but they're claiming they only control 5% of the hash power. They do run a pool that they manage, but anyone can join or exit that pool as they like. Now, if Bitmain is discovered to have lied about these things as a public company, that's a big problem. Because as a public company, if that's a problem, then the CEO gets replaced. Because the public companies have boards of directors and they have to answer to the public that invests in their company. Okay? Facebook is a public company. Okay, yes, Zuckerberg probably controls most of those shares. There is a board of directors. A CEO of a public company needs to run the company well, or the CEO gets voted out. And that can happen to any CEO. As long as the company is running good, it's fine. So I don't really worry about that. I don't worry about the centralization of mining in that way. Now, if the Chinese government shows up and takes over Bitmain, that could be a problem. I don't think they're going to do that, again, especially once they go public on the Hong Kong Stock Exchange. That's going to cause a big problem as a public company. So I don't know, and new manufacturers are coming online now that are challenging Bitmain. So I don't really worry about that too much. Question?
The adoption of segregated witness means the centralization from the developers. Because they cannot dictate, say, we're going to do this or we're going to do that.
I don't follow the question. Rephrase it.
Adoption of segregated witness. But the developers say we're going to do this, so the whole network moves to it. Is this also kind of centralization from?
No, not really, because sure. So the fact that we were able to get segregated witness doesn't mean that there is centralization on the developer side of things. I'm going to go with no as well, though that is a good question, because there is no single group of developers. Blockstream is one of the groups of developers. Chenko Labs in New York is even bigger than them. Lots of independent people were developing that as well. And segregated witness took a long time. It took over a year to code, another 6 months to test, and another 6 months to try and get it through because miners were hostile to it. And so many different people contributed to that project. It was tested and retested on so many levels by people that didn't even like each other or disagree with each other. And I don't think an effort this big is going to happen again. I think the next big challenge coming maybe in 2 to 3 years is going to be a need to potentially increase the encryption level of the protocol. Like everyone is worried about those quantum computers, but the quantum computers, they're not going to mess up with the mining. What they can do is the encryption of your private key may be at risk for quantum computers to break your password. In which case, you need to up the level of encryption that secures your private keys. That's going to be a big challenge. I don't think anyone is working on it yet, but sooner or later, it's going to need to be worked on. And that may require a hard fork that is, I'm not sure. Again, no one's talking about this yet. This is way down the road. Eventually, that will be a challenge because there'll be people that want Bitcoin to die and they're not going to want to, or they're going to want their own Bitcoin, like the miners wanted Bcash. They didn't want segregated witness. Segregated witness gave them some problems. Miners don't like low fees. Miners like high fees. Segregated witness lowers their fees, contrary to what that side was telling you. Segregated witness also accidentally eliminated this thing called ASIC boost, which allowed Bitmain to have a bit of an advantage. They didn't even know it was going to eliminate that because they didn't know they were using it. So there are going to be future challenges down the road, and you have to, in something like this, yes, there are, random people that can create genius things, but you almost have to go with the consensus of your scientists in the right direction. And if the consensus of all your scientists is X, you may want to stick with X. I don't think there's going to be any controversial changes to the Bitcoin code for the next 2 to 3 years. I just don't see it. Segregated witness was the big one, and now we're going to have more privacy, soft forks, Lightning channels. Lightning Network is going to be a layer 2 scaling solution that doesn't require any more forks. So it should be good. And side chains and drive chains, that's probably not coming. Too controversial, and the core developers don't want to go through this mess again. You don't really need that stuff for now. Let Ethereum deal with all the smart contracts. Let them show how it makes no sense, and we'll see what happens from there. Whoa, a lot of hands. Let's start from there and go that way.
What's your view on security
tokens? Well, what are security tokens?
Tokenized securities. People are putting...
Oh, yeah. Well, again, if you tokenize something physical or virtual, right? If you tokenize Apple stock, right? It's what I talked about earlier. That's fine. There's two things there, right? One, the government still decides if you own that stock, just like the government decides if you own that real estate, as much as you don't like it. So the government and the financial sector have to agree with the fact that your ownership of a stock is now represented by a token. And the value of that token is the value of that stock. Maybe a little bit of a premium if you can trade it easier, but that shouldn't be the bulk of the premium. And then you got to make sure that it's built on top of a secure network. And if that network is decentralized, it's probably not secure unless it's Bitcoin. And even Bitcoin can still disappear tomorrow. So even if you go with the most secure decentralized network like Bitcoin, and you tokenize a bunch of Apple stock, what happens if Bitcoin has a bug and it all goes away? Did you just lose all of your Apple stock? If the answer is no, there is some kind of a backup, then why are you using a blockchain, right? Like I'm using a blockchain, Bitcoin, my money's in Bitcoin. I understand that if Bitcoin has a fatal crash, I lost all of my money. I'm willing for that. Are you willing to do that with your medical records? Are you willing to do that with your $1 million retirement of stocks, your real estate, pretty much anything else? And the answer is no. And if you can't lose it all, then someone else is keeping a backup, and that someone else can confiscate it from you. So it's back to why are we using a blockchain? The beauty of using the blockchain is the fact that there is no ownership except yourself And as long as you remember the private key, as long as you remember the password, that's the property. It's this, it used to be called a bearer asset. US government used to have bearer bonds. Who remembers the movie Die Hard, the first one, right? I believe that they broke into that building to steal bearer bonds, US government bonds that have no name on them. Whoever is holding the piece of paper can send coupons to the US government, mail them in, they mail you back your dividend payment, and then when the maturity is up, you mail them the face value, and they return you the money. But whoever is holding that piece of paper owns it because there's no name on it. The US government went away with that for obvious reasons, because they were seeing how it's being used. They don't know who owns the government bonds. And now they want to know who owns the government bonds. That's what the Satoshi gave us on the internet. It's a way for whoever owns this digital asset to actually own it. It can be stolen from you. It can be hacked from you. You can lose it. You can knock your head and forget your password. You can get hit by a bus and your family will never have any of that Bitcoin. Okay? If you did not make arrangements to somehow give them that password. Unless you need that property for something, you don't want it. And I'm still trying to comprehend what else is it good for other than just money. Hope I answered your question. Next.
In terms of user adoption, taxes, it's something that really makes me think. So how is it possible to buy coffee with Bitcoin if you have to pay taxes on, at least here in the United States? So how do you see this in the future?
Sure. So a couple of things. So there are several initiatives to remove Bitcoin from that taxable angle, to treat Bitcoin more like a currency and not like an investment. Now, those efforts are difficult today, but in the future, if Bitcoin continues to grow, if Bitcoin continues to be adopted, and one Bitcoin is worth upwards of $100,000, I'm pretty sure, and is being used in most local stores, I'm pretty sure there will be exceptions. Like right now, I think there is like a $200 exception on foreign currency. Maybe it's 2,000, I don't know. But like, for example, if you go to Europe on vacation and you didn't spend all of your euros and you came back, like in my house right now, I have at least $50 worth of about 20 different currencies. Because when I go back to that country, I want to at least be sure I have enough cab money in my pocket so I don't have to pay for the crazy airport exchange fees. And what if I get there at a bad hour or at night? Like, I always want to have money when I get to a new country. Now, there are exceptions for that. I'm not tax liable for that. Like, if I'm holding a few $100 worth of euros in my house in the US and I go back to Europe in 6 months, like, I don't owe the tax difference because the euro could have dropped 30% in value, and it has. Euro fluctuated almost went to parity, and then it was like $1.40 recently, right? So there are exceptions for a reasonable amount. If you're not using it as an investment, you don't have to pay taxes as an investment. Bitcoin doesn't have that yet because even $200 worth of Bitcoin can greatly fluctuate. When the value of a Bitcoin is a lot higher, $1,000 worth of Bitcoin is not going to fluctuate as much. It's not going to appreciate as much. So then I think the laws will adjust to that a little bit. Also, once Bitcoin is more mainstream, there will be plenty of software, even in your phone. At the end of the year, if you're using the same wallet, at the end of the year, you hit a button and your wallet will calculate every single piece of a Bitcoin that has moved through your phone at what US dollar price it got in, at what US dollar price it got out. And with the click of a button, it calculates. Like, I was a day trader, used to make like 5-10 trades a day. You do that every day for a year. At the end of the day, at the end of the year, I'm not going to go and calculate it myself. My exchange sends me a piece of paper, says, hey, you did 900 trades last year. Here's how much money you made. Here's how much commission you paid. And just give that paper to your accountant and you're done. Okay. So eventually, when it's more important enough, whichever software that you're using will calculate all that for you and tell you how much your Bitcoin appreciated or depreciated in dollar terms. So in the future, that accounting should not be an issue.
In most industries, competition is helpful in creating ingenuity and things like that. Do you think that Bitcoin will continue to improve if there aren't other cryptos there to challenge it for its dominance?
Oh, absolutely. I don't see any Bitcoin core developers scared that something else is coming for them. I was interviewing Adam Back not that long ago, CEO of Blockstream, and I asked them, has there been anything in the altcoin space that you guys have considered adding into Bitcoin? He kind of smiled for a second and said no. On the flip side, everything that gets developed out of Bitcoin gets adopted by some other altcoin first because they're more centralized and it's easier for them to adopt whatever it is Bitcoin makes. Segregated witness got adopted by Litecoin and a couple of other currencies first because it was so much easier to do it and it was challenging on Bitcoin. Yeah, no, people will continue to innovate because enough smart people find this absolutely fascinating. And also a lot of those core developers are invested in Bitcoin, with Bitcoin. They've also worked on this thing for a really long time. And they don't want their baby to fail. They're not really motivated. A few of them have left and started their own project. Everyone tells them they're not going to be viable, but you'll get a lot richer. You don't, there's not a lot. You can the same thing about like Linux, right? Like, do Linux developers worry that another grassroots movement is going to surpass Linux? They're not. They're just going to keep doing what they're doing. And they're going to keep improving it because they know they're the smartest developers and another grassroots movement like that isn't coming. Let's go back there.
There's been a lot of talk lately about potential Bitcoin debt. Curious what your views on that were.
Yeah, that's an interesting one. So I don't see that coming. The SEC just came out and they shut down the WinCoY ETF for the second time. And their biggest reason was that they don't trust the underlying exchanges that determine the price of a Bitcoin because they're not regulated to their liking. Like they don't control, they don't know what's going on under the hood at Bitfinex, at Kraken, at all of these exchanges. Like Gemini can completely cooperate with the SEC, but Gemini is only what, 5% of price discovery of Bitcoin? And that's not good enough for the SEC. And one of the reasons why Gemini is only 5% of the price discovery of Bitcoin is probably because they're so connected to the regulatory agency. So it's a chicken and egg problem. Recently, the CFTC got upset at the CME. I'm using like a lot of words here. The CFTC, the Commodities and Futures Trade Commission, got upset at the CME, Chicago Mercantile Exchange. Thank you. I forgot what the C stood for. Chicago Mercantile Exchange, because they have the futures market, but the underlying price of the Bitcoin in those futures is determined by the exchanges. And they have 5 exchanges getting that price. And the CFTC is like, well, we don't think you have enough oversight. So the CFTC sent letters to those 5 exchanges saying they want to see more of their internal processes. And those exchanges said no. Kraken famously said no. So then the regulator got upset at the CME saying, well, you have a futures market, but how do you know that the underlying price isn't manipulated? Because we don't see what's going on under there. So this is the biggest problem that they're facing. I personally feel they're going to have an even bigger problem to decide, is actual Bitcoin going to back the ETF and who's going to be responsible for the storage of that Bitcoin? The way gold is backing the GLD ETF, someone's responsible for that gold storage. That's a big pile of gold. But it's a lot easier to secure a pile of gold than it is to secure a pile of Bitcoin. That becomes more complicated. Securing Bitcoin, as you see from all these hacks, most of which are probably internal. So for those reasons, I don't see the ETF coming. The only reason why I want to see the ETF is because we have a quasi ETF called GBTC that you can trade in your retirement account or in your traditional trading account. And it's so poorly designed that it really needs competition. So that's my only argument as to why the SEC needs to give us an ETF, is for that reason.
I've got a question to add on to this.
Yeah.
So are you concerned just down the line, like a commoditization and like a securitization of Bitcoin and these cryptocurrencies to be like another derivatives product that Wall Street will have, and it'll be diced up and all sorts of packages, and it gets away from that core from the beginning, you know, it'll just be another thing that'll be sold by everywhere.
It could, but because you can use it peer-to-peer, it's still going to be useful to us, right? I mean, you can make an argument that that will give it more volatility, not less, and we'll have to see. I don't think it will give it. I don't think Wall Street will give it more volatility. Like my argument is this: like people always blame the gold futures for suppressing the price of Bitcoin. I disagree. People say that the gold price is being manipulated, and I say, how is it being manipulated? I can trade gold. I've traded gold when I was a day trader a few years ago. I can trade gold from my house. I can buy the futures contract, same as Wall Street. I don't have enough money to buy as bigger portions, but I can participate and I can help in that price discovery. You know where I have no participation in price discovery? Diamonds. Okay, I have no control of that, right? Like a lot of men will have to buy a diamond. That's probably the most manipulated market there is. You know how to unmanipulate that market? Put futures, give Wall Street futures contracts. Then you'll see the value of a diamond, right? Price discovery. And not price determined by, you know, a couple of big conglomerates that are responsible for selling the diamonds, right? So to me, the easier it is for the average person to go in and out in a regulated market, the more efficient the price discovery.
Tony.
All right, let's go back.
So yeah, sorry, I asked you an ICO question earlier, so I got to ask you a Bitcoin question now. So you had said that Bitcoin, and I agree with this, I think most people would agree, Bitcoin is the only decentralized crypto out there, which is what makes it unique among all the other ones. So that being said, that's what gives Bitcoin its value more so than any other crypto out there. Does that mean that had Satoshi not disappeared, that we wouldn't be talking about Bitcoin today and it would have been this oddity and we would have forgotten about it by now? The reason we're talking about it now
okay,
is
so the question is like, if Satoshi was still around, would it be different, to sum it up? That's a really good question. I think that it would be more challenging. I think that if Satoshi was around, he'd be like the Vitalik Buterin. Like I can barely keep up with, you know, people hitting me up. I can only imagine Vitalik, right? And people still look to him for the answer. They look to him for the tiebreaker. They look to him to at least verbally solve the problem of disputes, even if he's not coding, right? So I think if Satoshi was around, it would be easier for another crypto, which was more of a grassroots movement, to take over. Again, we're talking, we're gonna go back to Linux, right? I've never actually used Linux, but like I understand the concept of how it was created, right? I mean, Linux was challenging the Mac operating system and Windows, right? And then you have Linux. Linux took a long time to catch up, right? Because it had no actual, like it was way more decentralized, but it caught up. Now, if Linux was the very first one, right, and it was already popular, would a more centralized version take over? Well, hard to say, right? They'd probably just package Linux, which is what they might end up doing. Apple won't, but Windows might. Like Windows might just be more of a distributor, right? Instead of having their own operating system, eventually, one day. So if Satoshi continued to be around, Even if he was anonymous, that would help, right? But the anonymous, he could be discovered. There would be a little less confidence in its decentralization. Could a better decentralized programming effort show up? Yes, very possibly, right? Because a lot of the core developers actually like the fact, like, would the smart core developers still be around if they had to answer to someone that can overrule them because they, because they're Satoshi, right? I think a lot of those core developers would not be there with Bitcoin, and the smart people might actually start a more decentralized version. So I think Bitcoin could have been challenged if Satoshi stuck around with a more decentralized version. Are we out of time? Should we wrap up? Or you have a question?
It's up to you. Maybe a couple more questions.
All right, let's do it.
I'll get one in myself.
Yeah.
What are your thoughts on proof of stake?
I think proof of stake is not technologically revolutionary at all.
Proof of work will be here forever.
It has to be, because proof of stake, I have two major problems with proof of stake. One of them is we're back to the same system we always had, almost like you put your money somewhere and you collect interest on that money for putting it somewhere. That's the old system. That's what we've had. That's what Bitcoin walked away from. No more locking up your money in a CD and collecting interest, right? That's what proof of stake is offering you. We're going to create more money perpetually, and all you have to do is not use your money to earn more money. So the person that has the most money can always earn more money, right? You can't do that with Bitcoin. Like Satoshi may have 1 million Bitcoin. He can't earn more Bitcoin for having 1 million Bitcoin. But if you have, 20 million Ethereum and it goes proof of stake, you can immediately earn more Ethereum because you were an early adopter. So that's the one problem that I have with it. The other problem is that there's no innovation there. There's nothing revolutionary there. I don't see any capitalism there. It's more like a king taxing people. Well, I have the most, and I want to make sure everybody's happy. So I will, again, earn the most for having the most. And I find that system to be very bad.
They want to get this down to like $10 per person. But by Vitalik is saying now they want to make it so eventually only just $10 to stake. Again,
it's and that's, again, it's a centralization problem, right? One guy is deciding all the rules, right? They all have to agree on that. They can't even go to proof of stake. How are you gonna? Ethereum blocks are every 12 seconds. One Ethereum token is about $400 today. How are you going to tell all your miners that they can throw away their gear? There's a lot of profit in Ethereum mining. How do you just show up and tell them to stop? I don't think they could. They're going to have to hard fork. And I said this years ago even. When Ethereum hard forks again, ETH is going to be a proof of stake with Vitalik. And there'll be an ETW, Ethereum work. And the miners are going to try and convince all of those ICOs, you want to stay with the mining chain because it's more secure.
You already have Ethereum classes.
Well, it's easier.
And that's for the hash power structure. That's already in the plan.
Well, that's the thing, right? Then you have to convince your ICOs to migrate to a whole other blockchain. That's a lot harder to do than to start another chain, not forcing your ICOs to move. That would be the legacy chain. Ethereum Classic is going to have major competition from another Ethereum work chain, not to mention Ethereum Classic is a lot cheaper than Ethereum. Why would those miners go and mine a coin that rewards them a lot less?
Ethereum Classic is on its way out, and now they're hoping to shut it down. They couldn't shut it down. I think but they're already testing Casper, Ethereum Casper, which is solving the problem that all these chains suffer from. They're solving performance. So blockchain, Bitcoin's got the point now where you can't use it as a currency because the transactions are too slow.
Well, for Bitcoin?
For Bitcoin, it's 4 transactions a second. Visa operates at like 18,000.
Right, Visa centralized.
But so Bitcoin,
Visa, yeah, Visa, we're not. The Bitcoin protocol is not competing with Visa. Visa is centralized.
They want to be a currency, though. They can't be a currency.
They could be. This is what Lightning is for. Lightning will have almost infinite number of transactions one day. Why not?
It's first off, it's a layer 2 solution that hasn't
Yes.
been proven.
Well, you got to choose, right? Do you want decentralization, censorship resistance, and privacy, or do you want Visa? Right? We already have Visa.
There's new ones on the way. There's directed acyclic graph. It's fixing all these things. It's quantum proof. And as more people join, it gets faster and faster. As more people use transactions, it gets faster.
Is it its own token?
It doesn't use a blockchain anymore.
Is it its own token?
So IoTA is using it, but they're scammers. But there's
They all are.
3 more on the way. There's a couple more on the way that are not scammers. And it solves privacy, it solves performance, and it solves scalability, all those things.
But it's centralized. It has to be.
It's not centralized anymore.
It has to be by default. How do they have their own token?
It's fair, they do. Well, technology does not have its own token, but people are building tokens on top, they're building currencies on top of it.
Okay, so which currency are you going to use?
When you use the one that correctly is not, right now there's IoTA, so those guys are really very questionable guys. But groups like MIT are saying that they can redesign it so it fixes.
Right, it'll have 800 tokens on it. Which one are you going to use? Which one are you going to convince the world to use?
And by the way, the people that made Bitcoin, they want you to switch like to Litecoin. It's like version 2.
Who's telling you all this?
I've been researching this since 2015.
Where?
We're not here for this conversation.
Bitcoin.
Yeah, we're not here for this conversation. I'm
Maybe we
sorry.
can have this
Can you put your own
offline.
video online? But this is not interesting to look at.
No. I don't know where you're getting your info, but I strongly recommend. Go listen to the Noted podcast, Andreas Antonopoulos' YouTube channel, my YouTube channel, the Bitcoin Knowledge podcast with Trace Mayer. Those are pretty much my only recommendation. Read the book, The Bitcoin Standard, please. I don't know where you're.
Proof of work can't sustain, and all the experts out there believe that.
100% incorrect. That's the proof of work is the innovation. That's why we're here. All right, I gotta move on. You had a question.
When you and Safety Dean were doing the interview, you guys talked about using Bitcoin on the fractional reserve system. That was, you kind of seem neutral or supportive of that. Wouldn't that create an inflationary number of Bitcoin in the market?
Yeah. The question is about my discussion with Saifedean about Bitcoin being used inside the Federal Reserve System. He's way more optimistic than me on that concept.
Fractional reserve.
Oh, fractional reserve. Sorry. Bitcoin being used for fractional reserve. I guess I'm more optimistic on that one versus Saifedean. I believe that I don't know. It's going to be hard to create credit in a system that's fully backed by Bitcoin, right? I mean, right now, there's credit everywhere. When you use your credit card, the money gets created out of thin air. That's credit. The bank decides how much credit you are worthy of. That's why you have a credit limit. Some people have 10,000, some people have 30,000, right? When you pay that credit card bill, you eliminate that debt. But if you don't pay your credit card bill, then there is a bit of a problem, right? Because the merchant still gets to keep the money, but that money was created out of thin air. So the assumption is that most of that credit will get paid back. Same thing with a house. You go and get a mortgage, some of the money gets created out of thin air, then you pay back the mortgage and that debt goes away. So my guess is that if Bitcoin becomes like the reserve currency, banks will still be there. And I still expect there to be credit. I still expect there to be some money creation being created out of thin air. It's going to be done more responsibly. It's going to be done in a limited way because the idea is you create money out of thin air, you loan it to businesses, businesses build something good, your economy becomes richer, people become richer, like this country is richer than a lot of the third world countries. and that debt gets paid back and everyone is better off, and that debt disappears. So I can foresee a fractional reserve system with Bitcoin. It just can't get out of control, but the cycle will probably repeat, right? I mean, we had gold on a gold standard, then it was fiat currency backed by gold, credit got to be too big, the gold got severed. You know, are we gonna go back to the same cycle on a 200-year scale? We're gonna go back to Bitcoin using only Bitcoin, credit will slowly build up, and then some government president is going to try and take away your Bitcoin like FDR did in 33. And then they're going to say, now our fiat currency is backed by Bitcoin. And then another president during another war is going to say, well, now we have to sever the convertibility of your fiat to your Bitcoin. And then we're back to the same. Then we'll need another Satoshi, right, to come up with something else. Could the last 200 years repeat over the next 200 years? Sure. We'll see how it goes. All right, one final question.
Well, I feel that a lot of the worth of the Bitcoin, come, not just Bitcoin, also like Ethereum, it comes from also demand for people that want to purchase the crypto, data crypto. So what's your opinion will happen like once a lot of like different exchanges like Binance, for example, will start using fiat money and would allow people to actually purchase those coins without using Bitcoin, and how would it affect the price? Because I would think that a big part of the worth of it is because there is demand to buy other things that you, until this day, you got to use either Ethereum or either Bitcoin. So how would it affect the value of it?
I mean, it really shouldn't, right? I mean, it's just trading. It doesn't now. Like, if you have to, the question is like, what would happen if you didn't need Bitcoin or Ethereum to buy other tokens? Remember, if you want to buy ICOX and you have to go and buy Ethereum to buy ICOX, you sell the Ethereum when you buy ICOX. So it's not like it doesn't matter. Whatever demand there is for Bitcoin and Ethereum to use it as a medium of exchange, it doesn't actually help the value of a Bitcoin. What helps the value of a Bitcoin is more people using it as a store of value. Back in 2014 bear market, when Bitcoin went up to $1,000 in 2013, it then started to fall in 2014. What was happening in 2014? We were going crazy over every new major business that accepted Bitcoin. Oh my God, Expedia is now accepting Bitcoin. Dish Network is now accepting Bitcoin, right? There was an article about, what do you call it? PayPal's subsidiary, something Tree. Braintree.
I think they own. Yeah,
right.
They're around here.
Braintree was going to integrate Bitcoin. I remember those articles. And I said, do you guys realize that if all of these companies start accepting Bitcoin, the price of Bitcoin is going to keep crashing? Because what are they doing? They're allowing you to spend your Bitcoin. They're not holding the Bitcoin. They're selling it on the open market. It doesn't help the price of Bitcoin as these merchants start accepting it. What happened by 2016? All of those merchants that started accepting Bitcoin stopped because it didn't make sense to them. We went back to no merchants using it. And now the value is going up again. Now more merchants want to use it again, right? So merchant adoption and the velocity of that Bitcoin isn't really helping that Bitcoin go up in value. Spending Venezuelan people.
False demand. It creates like kind of a false demand.
Right. It creates like it creates these, like highs and then crashes, right? It's actual functionality, right? Storing Bitcoin, saving Bitcoin, using Bitcoin with people that want to store the Bitcoin. Like I'm doing my workshop tomorrow on trading. I only accept Bitcoin as payment unless somebody wants to show up and pay me cash in hand. I only accept Bitcoin as payment, and people that pay me in Bitcoin know that I'm going to store that Bitcoin. So I am contributing to the Bitcoin economy by raising the price. I'm not immediately selling that Bitcoin for cash. I'm just using that Bitcoin, and I'm going to store as much Bitcoin as possible. And I spend it when I need to, and I try to. And if I know that this business is going to immediately convert it into dollars, why do I want to spend my Bitcoin there? Why do I want to lower the price of the Bitcoin that I have in my cold storage? Because this guy is going to sell it in the open market. I'd rather use dollars. I want to use the currency that I care about least. But if that person is going to value that Bitcoin, try to pay his employees, hold on to it for the long term, I'm way more willing to spend it there. So it doesn't bother me at all that these exchanges allow people to now use dollars and not Bitcoin. It'll only make Bitcoin less volatile and more stable. So I'm okay with that.
So are you saying Bitcoin is actually confined to the only store of value? Because any mass adoption of Bitcoin as a payment needs would actually undermine value of Bitcoin in the long term?
No. Not only store of value. If you want the price of Bitcoin to go up, you want it to be a store of value. You want it to be scarce. If your Bitcoin is circulating freely, its value is going to be stable, right? So the more people hoard Bitcoin, the more its value rises. If people start spending it too much with people that immediately sell it, its value is going to fall. But if Bitcoin is circulating through the economy, that's the best thing for a stable price and a stable value. But I think Bitcoin needs to be at a much higher price in order for it to be stable, especially for those small transactions, right? If you're going to go and spend $1,000 on something, right now, that's going to fluctuate from week to week. But buying a cup of coffee today with Bitcoin, it doesn't matter if Bitcoin is 7,000 or 20,000. Your cup of coffee only changes by about 3 cents. It doesn't matter. So once the price of Bitcoin is above 100,000, you know, that car you want to rent for a week, it will not matter if Bitcoin is 100,000 a coin or 120,000 a coin the next day. Your $3,000 purchase is going to be almost stable. And that's what's going to happen. As the value of Bitcoin goes up, slowly larger and larger purchases become more and more stable. All right, I think we're done. I know there's a hand back there, but unless it's a quick comment.
Just what is your opinion on that price?
Oh, price. I think we're gonna go down more this year. I think we're gonna fall below 5,000. I hope it doesn't go to my low target of 1,300. But I haven't given any target between 5,000 and 1,300 until we go under 5,000. Once we go under 5,000, I will then reevaluate, because when we go under 5,000 matters to me. And I don't know when it's going to happen yet. So I still think we're going to go below 5,000. I think we're going to bottom either as early as October, November, as late as next summer, and the next bubble will take us above 20K. So by the halving of 2020, I expect Bitcoin to be above 20K. How far above? Again, a little too early to talk.
Where does it have to be for that stability?
Oh, over 100K, I would think. The day we're not talking about Bitcoin, but the day we're talking about bits is when we're probably going to have that stability. 1 bit is 1 million. A Satoshi is 100 million. A bit is 2 decimals over. So when 1 Bitcoin is 10,000, 1 bit is 1 penny. If Bitcoin is 100,000, 1 bit is 10 cents. When we're talking about bits, I'm going to pay you in bits. Now we're getting somewhere.
Thank you so much.
Thank you, guys. Hey, thank you, live stream, guys. Hope everything came out good. I wasn't watching the live stream, obviously.
Nice to meet you. Nice to meet you. I will, absolutely.
Thank you. That was great.
Thanks, guys. Let me stop this live stream and then we'll